Hey traders, welcome to FSC-Capital's YouTube channel. If you're wishing to learn how to trade advanced pattern, then you're in the right place. Grab a pen and paper and get ready to start taking notes. Today I will be analysing a pair that's on my radar for next week, and guess what? We have a potential advanced pattern setting up. I trade 3 different types of advanced patterns, and they are Gartley, Bat and Cypher. And if you're new to this channel, my name is Shah Chowdhury and I thank you for taking your time to watch this video. And if you already subscribed to our channel, I thank you also for your loyalty and hope you take away valuable information. Every week I will be sharing opportunities on my radar and plan to provide you with educational content which I hope you take away few golden nuggets, if not few, just the one golden nugget to enhance your own trading. If this is something you're interested in, please subscribe to our channel and hit that bell notification too. Now, with all that said, let's head over to the charts and I'll show you one of the pairs that's on my radar for next week. Okay traders, I'm on the pound yen 4-hour time frame. Before I dive right in and show you where and how I plan to enter on this pair, I'm going to give you the rules for the back pattern. Now don't go trading this blindly. Take some time to backtest this strategy, create a solid trade plan with strong money management before risking live capital. The great aspects of trading advanced patterns is that it removes subjectivity on how you should enter, because you have to follow a set of rules for the completion of the pattern. The first leg of the move is called the impulse leg. So I've already got this labeled X to A. Okay, once you can identify this impulse move, okay, you need to grab your fibs and draw your fibs from X to A, just like that. Now the next set of rules is the retracement for the B leg should touch the 50% ratio but not touch the 61.8. so it can actually complete anywhere in between, or it can actually, the wick can touch the 50%, but it should not touch the 61.8. That's the first set of rules. The second rule is once you've got that, so once you've got the X to A, you've identified the impulse leg, then you've identified the next move, which is A to B. B to C, let's grab our fibs again. B to C, so you now draw from A to B, okay. Minimum, it should touch the 38.2 minimum, but it cannot go above A. So price can come and complete anywhere in between 38.2 and your A leg, but not go break and close above A, or even break above A. Okay, so the C completion must touch the 38.2. now once you've got that, so you've identified your impulse leg, your X to A, you've had the A to B move, now you've got the B to C move. Okay, now to enter the trade you need the last set of rules, the last leg of the move. You have to grab your fibs and draw from X to A again, and the D completion is at the 88.6. This is where you set your orders for. This is a bullish pattern, bullish back pattern, and your orders will be sitting at the 88.6. Your stops go below X. Now I'm going to give you stop loss rules because everyone's different. You might be following ATR, you can go ATR below or 10 pips below, depending on how you backtest your strategy. Find what works for you. Okay, so the decompletion of the back pattern is the 88.6. Now if I draw that in, let's get that, and let's get my back pattern tool. So you got X to A to B, B to C, and the CD completion at 88.6. Now, in order for you to take your targets off, I always enter 2 trades, okay? I take half of my trades off at the 38.2, and my secondary targets will be sitting at the 61.8. But you need to draw your fibs from X to D in order to get your targets. Stop loss is below X, A to D, draw your fibs, 38.2, target 1s, target 2s at the 61.8. Those are the rules for a bullish back pattern. Vice versa for the bearish. The only difference is your X leg is where your A is labeled. Okay, so once again, once you can identify your impulse leg, X to A, you grab your fibs and draw your fibs from X to A, and once again it needs to touch the 50%, not touch the 61.8. okay, once you've got that move, you need to wait for the C leg. Again, grab your fibs from A to B. Now, once again, the C leg minimum requirement is a 38.2, but it cannot penetrate A. Price cannot penetrate A. So you've got all this room where the C leg might complete. Once you've identified that again, you draw your fibs once again for the completion of the pattern, X to A, and your D completion will be sitting at the 88.6 for a bearish move. So let's draw this in again. Let's get my special tool, X to A to B, B to C, and CD completion at the 88.6. Now, in order for you to find out where your target should go, grab your fibs again, draw it from A to D, and your target should be sitting at the 38.2 and the 61.8. It's as simple as that. And your stop loss again is above X. This is the bearish bat pattern. So you got specific set of rules in order for you to enter a trade. That's why it removes subjectivity, traders. And it is a profitable strategy, but don't take my word for it. Go and back test this strategy and find out the overall performance for yourself. So we've got the rules: X to A to B, 50% must not touch the 61.8. B to C, minimum requirement, it needs to touch the 38.2. Okay, but not penetrate A. And C to D completion is the 88.6. Let's move over to what I'm looking at on the pound yen. So we have got a bearish back pattern on the pound yen. Okay, so there's your impulse leg. Now I'm going to grab my fibs again. There is your impulse leg. From this high to this low. Okay, you can clearly see it touches this 50% ratio, but does not touch the 61.8. The next set of rules, once I've identified that, is I'll draw my fibs from A to B. So that's X to A to B. And you can clearly see the 38.2. penetrates 38.2 but does not penetrate my A leg. Now I've got a potential advanced pattern setting up, and the decompletion will be X to A to B, B to C, and CD completion at the 88.6. And that's it, traders. So we have got a bearish back pattern setting up on the 4-hour time frame for the pound yen. Once again, my targets will be at the 38.2 and the 61.8. So I'll draw my fib from A to D. 38.2, my first target. My secondary targets will be sitting at the 61.8. My stop loss will be above X. That's it for me, traders. Hope you found this video useful. If you have any questions, please feel free to leave your comments below. Before you head off, please don't forget to hit that like button and help me grow this channel by sharing it on social media. Hope you have a lovely week, and more importantly, wish you a prosperous week in the markets.